What are the key Bitcoin liquidation levels that will define the next leg? We are analyzing the Bitcoin double bottom support at 59K, the impact of today's PCE inflation shock, and whether Bitcoin funding rates are signaling a short squeeze. There is one danger zone and one hidden opportunity in Bitcoin right now, and I'm going to show you both. Bitcoin just slipped below $60,000, and the entire timeline is screaming panic. But while the crowd is busy pressing the sell button with their eyes closed, a classic liquidation trap is forming, one that can wreck late shorts just as viciously as it wrecked late longs. Stay with me to the end because I'm giving you 3 exact levels you can trade today, complete with entry triggers, stop losses, and profit targets that work whether we bounce or break. Right now, the session bias is simple. I am fading this breakdown. I am looking for a mean reversion bounce off the only level that matters, but I will instantly flip full bearish if one line breaks. Write this number down, 59,076. That is the double bottom on the daily time frame, and if Bitcoin prints a daily close below 59,076, the entire structure resets. No more bounce talk, no more scalping longs. Below there, the liquidation engine goes into overdrive and the door opens to 57,100 first, and then a freefall straight into 55,085. That's your invalidation level for any bullish idea. Here's where the herd is positioned, and it's beautiful if you know how to read it. Retail. Sentiment has flipped hard to extreme fear. Funding rates on major exchanges are negative, meaning shorts are paying longs, and open interest hasn't fully reset. That tells me late sellers are piling in below 60,000, expecting a straight line crash, while institutional spot bids are quietly absorbing at this 59K demand zone. When the crowd gets too comfortable one way, the market has a habit of engineering a violent snap in the opposite direction. So I'm watching for a liquidity grab below 59K that reverses fast. That's the trap. Let's walk the charts from the weekly down to the 60-minute because the technicals are giving us a script. On the weekly, the trend is a strong sell. The 200-week moving average is way up at 76,193, which tells you we are in a broader bearish structure after being rejected from that level months ago. The weekly MACD is still negative and pointing lower, no sign of a bottom yet. But the weekly chart is too slow for active entries. That's just the backdrop. Come down to the daily. The daily trend is also a strong sell, and price is trading well below the 20-day moving average at 64,498, and the 50-day at 67,925. Those are our overhead resistance magnets. But here's what most traders miss. The daily candle is approaching the exact same 59,076 level that held 2 weeks ago, forming a potential double bottom. If that level holds, we have a structure low to work against. The daily MACD is deep in negative territory at minus 2,700, but take a closer look at the 4-hour chart. The 4-hour MACD histogram is starting to print higher lows while price is making a second touch of 59K. That's hidden bullish divergence, and it's the earliest whisper that selling momentum is exhausting. It doesn't mean buy blindly. It means be ready for a counter-trend move that can squeeze shorts. Now the 4-hour moving averages. The 20-period MA on the 4-hour is sliding down at 64,498, which lines up almost perfectly with our daily resistance zone, so any bounce will have to contend with that brick wall first. The 60-period MA on the 4-hour is near 65,000, adding to that cluster. The 200-period MA on the 4-hour is far above at 71,600, so the trend is clearly bearish. But on the 60-minute chart, I'm watching the pivot point at 61,091. That's the immediate bull or bear line. While we are below 61,091 on an hourly close basis, bears are in control, but the moment we get a clean hourly close above that pivot, the trapdoor swings shut on shorts and we could see a rapid repricing towards 63,067, the first resistance. Let's pull in the cross-asset linkage because Bitcoin is not trading in a vacuum. Bitcoin right now is the risk asset shadow. It's moving tick for tick with Nasdaq futures, and the correlation with the S&P 500 is near its highest this year. Why does that matter? Because the S&P 500 is sitting on its own critical support at 5,900, a major gamma flip level. If stocks lose 5,900 and VIX spikes above 20, Bitcoin's double bottom at 59K will have a much harder time holding. The liquidity tide goes out, and crypto gets dragged lower. Conversely, if equities find a bid and the dollar index stalls at 105, Bitcoin gets the green light for a short covering rally. So as you trade BTC, keep one eye on the ES futures and DXY. They're the puppet masters. The fundamental driver over the past 24 hours is crystal clear. Yesterday's core PCE inflation gauge came in at the highest level since 2023. That's the Fed's preferred measure, and it killed any remaining hope of a near-term rate cut. Interest rate expectations repriced hawkishly, real yields jumped, and risk assets got hammered. Bitcoin, as the most liquidity-sensitive asset in the room, slid below 60,000 like butter. The narrative now is higher for longer, which historically starves the crypto bull case of its oxygen. But here's the twist. This inflation shock is now fully front page. The market has already digested the data, and the sell-off is extended. The next leg depends on whether the dollar can push through 105 and whether bond yields keep spiking. If the data calendar quiets down and the DXY tops out here, Bitcoin has a window to breathe. The 1-week directional lean. I am neutral to cautiously bearish while below 63,067, but I will not chase shorts at these levels. I'm waiting for either a clear breakdown of 59,076 with a daily close, or a reclaim of 61,091 to play the bounce. The invalidation for a bearish continuation? A daily close back above 63,067. That would signal a failure of the downtrend and open a recovery towards 65,000. Quick interaction trigger. Do you think Bitcoin holds 59K this week? Drop a comment with hold or crash, and where you see it closing on Friday. I'm tracking consensus, and I'll call out the herd later in the week. Now, the most important part of this entire video. Most people skip the trade setup section, but that's exactly where the money is made. Stay with me because I'm about to give you 3 fully mapped trading strategies, from the conservative sniper to the high-risk aggressor. Write these levels down or screenshot the trade cards. Each one comes with exact entries, stops, and targets. Strategy number 1. The sniper, your conservative play. This is built on the double bottom holding and the hidden bullish divergence playing out. I want a long entry only if we get a decisive 1-hour candle close above the pivot point at 61,091, and I want to see the 1-hour MACD cross above its signal line as confirmation that momentum has shifted. If those two conditions align, I'm entering long with a stop loss at 58,800, which is just below the 59,076 double bottom, giving the trade room to breathe without getting wicked out. First take profit is 63,067. Right at the initial resistance and a measured move from the pattern. Second take profit is 64,500, which lines up with the 4-hour 20 MA and a high volume node from the breakdown. The risk reward on this is roughly 1 to 3.1 R, solid asymmetry. What voids this setup? A. Daily close below 59,076. If we close the day under that double bottom, the trade rationale evaporates, and you exit immediately. The sniper, conservative, entry, 61,091 on 1H close above plus MACD cross stop loss, 58,800 take profit 1, 63,067 take profit 2, 64,500 risk, reward, 1 to 3.1 are invalidation. Void if daily close below 59,076. Strategy number 2. The active trader. Your standard play for those who can monitor the session actively. This one plays the resistance test. I want to short Bitcoin if price rallies into the 63,067 resistance and fails. The exact trigger is a bearish rejection candle on the 1-hour or 4-hour chart at that zone, something like a shooting star, a bearish engulfing, or a long wick rejection with volume. Entry is on the break of the rejection candle's low, with a stop loss placed at 64,000. Above the resistance cluster and the 4-hour 20 MA, giving enough room to avoid a fake-out. First target is 61,100, just above the pivot for a natural retest. Second target is 59,500, right near the double bottom zone. Once the first target is hit, Move your stop to break even and trail it with a 4-hour close above the 20-period MA as your dynamic rule. This setup respects the bearish trend while selling into strength instead of chasing panic. Invalidation. A 4-hour close above 64,000 flips the structure and kills the short idea. The active trader, standard, entry. Short on bearish rejection at 63,067, entry on break of rejection low stop loss. 64,000 take profit 1, 61,100 take. Profit 2, 59,500 trailing stop. Move to break even after TP1, trail below 4H20 MA invalidation. 4H close above 64,000 before we get to the high risk play. Type your Bitcoin range for tomorrow in the comments, high and low. Let's see who's truly aligned with the levels. This interaction helps you internalize the numbers. Strategy number 3, the aggressor, high risk, high reward, only for those who can lose small and manage risk aggressively. This is a counter-trend long taken directly from the double bottom support, playing the liquidity grab and the trap. The setup, we watch for a spike below 59,076 that immediately recovers, a stop hunt that wicks into 58,800 or even a touch of 58,500 and then closes a 15-minute candle back above 59,200. That's the liquidity grab. Entry is long at 59,200 once that recovery candle closes, with a tight stop loss at 58,400, just below the wick extreme. The idea is that the market has swept sell-stop liquidity and is now reversing fast. Target 1 is 60,500, a minor intraday resistance. Target 2 is 61,091, the pivot, and if momentum is strong, you can trail on the 5-minute 20 MA to catch an extended squeeze. Risk-reward here is around 1 to 2.4R on the first target, potentially much more if the squeeze gets legs. This is not a trade for your whole position size. It's a scalper's hit with a defined, small loss if wrong. The setup is void if the 15-minute close is not reclaimed above 59,200. If it keeps dripping, you stand aside. And if the daily close later confirms below 59,076, you never look back to the aggressor, high risk, entry. Long at 59,200 after sub 59,076 wick recovers on 15M close stop loss. 58,400 take profit 1, 60,500 take profit 2, 61,091, trail with 5M 20 MA, risk, reward. 1:2.4R plus dynamic invalidation. 15M does not reclaim 59,200. Daily close below 59,076 cancels bias warning. Small size only, aggressive risk management required risk management pulse, 30 seconds of non-negotiable rules. Never risk more than 1 to 2% of your account on any single trade. No positions through high-impact news events unless you're explicitly positioned for the volatility. Stops are not suggestions, they're your survival. Use hard stops, honor your invalidation levels, and remember that capital preservation is what keeps you alive to trade the next monster move. This is how we play the game without getting carried out. Let's lock in the session. The single most critical level going into the next 24 hours is 59,076. That's the daily double bottom. Hold above that, and we have a trapdoor for shorts, a potential squeeze to 61,163,000. Lose it on a daily close, and the bear case accelerates straight to 57,155,085. No ambiguity. Tomorrow's wildcard is the daily candle close. Will we print a massive hammer with a long lower wick, confirming the double bottom, or will we see a full bearish engulfing that opens the floodgates? I'm also watching the S&P 500 divergence and whether ES futures lose 5,900. That correlation will tell us everything. If you want the full breakdown on the S&P 500 and how it's dragging crypto into the next liquidity event, that video is live right now. Tap the end screen and I'll walk you through the gamma levels and VIX structure that matter. Smash the like button if this gave you a clear, executable plan. Subscribe, hit the bell, and I'll see you in the next one with tomorrow's levels before the market moves. Let's go.